Hi, this is Randy Finney with the Right Side of the Chart, and this is a closing market wrap for Thursday, December 6, 2018. All right, quite the day. We had a nice reversal in QQQ, NQ, ES, pretty much the markets in general. If you caught this morning's market update, I pointed out that we had a divergent low in the futures, 60-minute charts of both NQ, the NASDAQ 100 E-mini futures, that's what we're looking at here, as well as the S&P 500 futures. So Nasdaq had dipped, between this support and this support here, right in the middle. So we'll call that a support zone. And nice reversal. You can see again the divergences. These were actually highlighted last night as in the trading room on right side of the chart.com as potential divergences. And then this morning we had confirmed those with a bullish cross on the PPO. And so far they played out nice. Now let's look at where we might head from here, what this means. Before I leave this chart, if you didn't catch this morning's update, what I pointed out here is we had these bear flag patterns that set up. This was Tuesday's big drop here. Then the futures traded after the regular market closed at 4 o'clock p.m. Eastern time, set up in a flagging action, and that flag played out pretty much to the measured target, which again is a flagpole, the impulsive move leading down into the formation of the flag. And so that was met. And now right back up to where we started. So, the big picture here, I'm going to get to ES in a second. When you look at these candles here, this is QQQ on a daily chart. Forget about all the trend lines for a second. It's that same theme I've been talking about recently. It's like a big fight between two heavyweight boxers, just exchanging blows, two sluggers. And yesterday or Tuesday, the Bears certainly won. There was a big red candle. And then today, it wasn't a huge up day. We were up 0.71% in QQQ, but that's a respectable gain. But more importantly, today was had a lot of makings of a bear trap. So we have to be on alert for what happens in the coming days here. If you look at the 1-minute chart, this is a 1-minute chart right here. So if I grab with my measuring tool, let me go right here, show you that yellow dashed line. That's Tuesday's close. Remember, the markets were closed yesterday. So we had a move down here, about a two. Well, I thought it hit 2.5. It was over 2.5, I think, on the futures. 2.4%, almost a 2.5% drop. So a pretty hefty gain. So we gapped down. We even took out that low. I have to imagine this pulled in a lot of shorts that thought the market was going to collapse, and then they reversed it. So pretty impressive rally off the lows. That's a recovery of about over 3% there, about 3.25%. Again, we didn't close huge green, but that's really the nature of the beast. And somebody in the trading room just said this. There was a comment, and somebody replied, the charts are as clear as mud. And that makes sense. And that person said they're standing aside. If the charts aren't clear, if you don't know where this market's going, don't try to trade it. I just want to say this a little side real quick. When you see the QQQ have a 3% intraday reversal, if you're an active trader, for example, if you trade NQ, one contract of NQ alone on a 3% day, you're talking, I don't know, 4 or 5 grand, be 4,500 bucks or so per contract. And just hypothetically, if you caught the lows. So I know those gains are very alluring. And if you have a good pulse on this market and you know what to do, you probably don't even need to listen to my video here. But I'm trying to speak to the masses, that those that are, in SQQQ, out TQQQ. This market will chew you to pieces if you don't know what you're doing. So in trading, I think one of the key rules is sit back and wait for your type of setup. Wait for high probability objective entries. As I've said this morning, we're getting pretty stretched. I could certainly see another 3, 4, 5% downside, maybe a little bit more in the market, but the risk to reward from especially where we opened today, than when I was talking about it, is not or was not very attractive. It's just not worth it to get caught in one of these sudden reversals. Now, if you're an active trader and you'll say you did short the open this morning or the drop down, that's fine as long as you had a stop once we started going back up. Maybe once we took out this, entered the gap from this morning, in other words, from where the market opened, and then you minimized your losses. But remember, if you're trading futures, you can set a stop loss order that will be hit virtually around the clock in the overnight session. But if you're trading QQQ or those leveraged ETFs, SQQQ, TQQQ, or anything out there, you're prone to large gaps, and we saw that today. Again, we saw a big gap down in QQQ this morning, and stop loss orders do nothing to an ETF or an ETN in the overnight session. They will fill when the market opens at 9:30 a.m. And if you have a 3% gap against your position, a market order will fill, or I'm sorry, a regular stop order will fill at the opening price. And a stop limit order will get bypassed and won't fill, where your losses could actually get worse. So just keep that in mind. And again, if if you're not sure what to do, stand aside. This correction will be over soon, and whether it is a bear market rally or just a pretty bad correction in an ongoing bull market, we'll figure that out later. What I can say is sooner than later, we'll have there'll be time to start getting back in, scaling into some long trade ideas. So I think if you're patient, it'll be worth it. Is a possibility of a market crash there? Sure, it always is, especially when volatility starts spiking. We have this credit bubble that's been unwinding lately, a lot of forced margin selling. But again, it's about risk reward, and the probability. If I had to give you one, and I'm just now thinking off the top of my head of a true crash where the market drops 10% or more from where we're at now, I would put that at very low. Very, very low percentages, probably 5% of that. It's just not worth it. I'd rather sit back. And again, I'm generally speaking here. I'm not speaking to what I'm doing or anything, but if not knowing what you're doing, sit back and wait for that, and then step in and buy when there's blood in the streets. If you see a big drop down to we still haven't hit those lows back from earlier in the year. That's certainly a potential target, as I highlighted. Doesn't mean we can't go any lower than those, but I think we'd have a heck of a buying up if we got there, and if the chart's still confirmed. In other words, we still had some divergences here on the daily time frame. And there's more that goes into it than just looking at QQQ. What I do is I'll dig down to the individual components, the top stocks. We're going to do that real quick. We're going to look at some of the sectors in the S&P 500 because I want to speak to some comments that I made within the trading room today. And let's just go there. Before we do that, let me just follow up with the S&P 500 index futures. I showed you NQ. So here was the S&P 500 futures. Same story. You can see we just had another shot down this morning after the open. Hit that. There's that 26, 25-ish level I talked about. A very, very important level I mentioned. You can see probably the most important level right now that I'm watching on the markets, because this is the S&P 500. This is a stock market. QQQ is not. I love trading QQQ, but I always jokingly refer to it as a tech ETF with an Amazon kicker, because it is 60% or so technology. It doesn't have energy stocks, financials, which we're going to look at today. Those were what dragged the S&P 500 down. And so what I noticed, and this is what I was getting to earlier today, I mentioned that I was watching the Qs all day, and it looked like they really wanted to go up, and they were going up, and of course they did go up. But at one point they were being held back. They made two. Here, I'll show you what I'm talking about here. QQQ made two intraday attempts to go positive earlier that were smacked down. Here we go, right here. I'll grab this tool here. So we went green here when we crossed that yellow line. Again, that's Tuesday's close. Market was closed on Wednesday. Did it again, but you can see it was making a series of higher lows. This is an uptrend. That's a simple definition of an uptrend. Prices making a series of higher highs and higher lows. And so this is on a 1 minute chart, a very near term, just today's uptrend. But that's what happened. And we had a third pop above there to go green, and then finally we broke it, back tested. So that was what you had here. This is a gap backfill. We gapped down, and then we came up, backfilled the gap, tested the top of the gap again, tested it the third time, and then finally broke out, back tested it, because resistance, once broken, becomes support, and that's where we closed today. Now I'll get to where we're heading from here. I know I do these recaps, and that's good, and hopefully maybe it's an educational resource for some, or just a catch up for those of you that have to work and don't watch these charts tick by tick like I do all day. Kind of shows you what happened, but the most important thing is where we're going, and I'll get to that in a second. Before I do that, remember we were just on the QQQ 1 minute. This is a SPY 1 minute chart. So here's SPY. There's where we closed Tuesday. we gapped down right here and then went quite a bit lower. So we didn't see such a significant low after the gap down on QQQ. That number one showed relative strength for QQQ. And then QQQ started coming up early at this point, this point, and this point. Those were those three attempts on QQQ where it had already backfilled its comparable gap. And SPY was weak, being dragged down. SPY tried to and almost did make a backfill of the gap at the close, but keep in mind this is resistance, and this, the S&P 500, if any one index is the stock market. Again, QQQ is not. It is tech, and that is what started this whole correction, led the way down, the big FANG stocks. But recently, we've seen some significant deterioration in the market. We've seen the transports doing very poorly. Today, it was about financials, industrials, and energy. I'm going to get to that in a second. So just back to what I said earlier about that heavyweight fight between the Bulls and the Bears. Although today was certainly, I imagine it had to trap a good deal of shorts that shorted the move down today, or that stayed short from last week with that big reversal in QQQ. By no means is that a all-in buy signal. There's still a lot of work to be done in this market. It is still in a very precarious technical posture. This is a daily chart of SPY. We are still well below the 50 and 200-day EMAs. I'm starting to. Somebody asked me a question today about the yield curve inverting recently and what my thoughts were, and if I put a lot of weighting on that. I used to put a very heavy weighting on it. Not so much anymore for two reasons. Number one, that's all everybody is talking about right now. And when everybody's looking for the same signal, it's usually not going to work. So either way, we've had the short-term rates invert, not the long-term rates. I don't think we've dropped the 10-year below the 2-year yet. And I know the 30-year hasn't dropped below the 2-year, I don't believe. But either way, too many people talking about that, in my opinion, and also too many people now talking about this death cross. So we may get it. The lines are so close. Again, I'm referring, if you're new to my analysis, this 50, 200-day I've been talking about, 50-day moving average and 200-day, both exponential moving averages. And they're poised to make a bearish cross. The SMAs, I don't know where they're at. Those are the simple moving averages. They'll come in very similar. It's just a different calculation of the moving averages. Um, like I said, I think we're close to the end of this correction. I believe anything's possible. Charts are dynamic, and so is my analysis. A week from now, 2 days from now, I may be singing a different tune if the charts tell me to. But what I'm getting at, if we have a crossover, and that just guns up the bears, and get some more latecomer shorts. Those that weren't shorting here, 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 or here and here and here. If you short now, because we get a crossover the next day or so, they'll probably get smoked. That'll probably be a whipsaw signal. Just be careful of that. I take everything gets factored into my analysis. So there's not any one single buy or sell indicator. So all I'm trying to say is don't put too much stock into a crossover. I think these lines will cross. I do think, and I've maintained for a long time now, the market's probably going lower going forward in 2019. This is quite likely a bear market rally. So when I talk about the correction being over, all I'm talking about is the next tradable trend, a rally of, the next double-digit move being most likely to the upside. So whether it ended today, which is certainly a possibility, or whether we have another jog down of maybe up to 5%, I think the end is close before we get a decent rally. And these aren't my measured targets, just kind of outlining a bounce here. So we'll see. That's what I'm looking at now. And let's talk about those sectors today. Okay, the worst performing sector, at least when we closed the day, was energy. And what I'm referring to, I have a watch list. There are 11 sectors in the S&P 500. This is one of those. This one has I haven't updated these in the last couple of months, but it's roughly accurate, about a 6% weighting in the energy sector. This is XLE. So what do I see with XLE? I do see, like the broad market, I see potential divergence. It's still not confirmed. We'll need another bullish. Well, actually, it is at this point in time. I take that back. It is confirmed, but we may go down. These divergence lines could extend, or they could play out now at any time. So what I'm referring to, extending the divergences, if we take another leg down, as long as we don't take out the previous reaction lows in these momentum indicators. This is the RSI. This is the PPO. Then there's a potential for divergent low. You can see a key reaction low here from 2017. We also had a divergent low back then, and that that's triggered this big rally that we had. So that's a natural support area right there if you get down around that area. Sometimes if all eyes are watching this level, you may reverse just shy or you may undercut it, but either way, that's about, let's just say for now, my max downside range. Really from anywhere where we hit today down to a little bit below that level there. So it again, it kind of aligns with what I'm looking on the broad market. Minimal downside. In my opinion, not worth shorting here. May even be worth scaling in long. A little bit premature. You might want to wait for a firm buy signal. Depends on your trading style. But I think there's minimal downside, and then I think we'll have a decent rally in the energy stocks. But they were weighed on pretty heavy today. Crude was down. Crude futures down 2.25%. What was USO? USO down, yeah, 2.15%. And there's a downtrend line, so USO looks ready to pop, but we don't have any buy signals yet. So that's energy. We also had financials. They weighed heavy at one point. They were down even more. They were down the most. And same story there. This chart is ugly. Not going to spin it any other way, but I do see some potential bullish developments. I use the word potential because they're not there yet. We're not confirmed, but we have this potential divergence at this point. But at this time, the momentum indicators, the PPO is pointing lower, the RSI is pointing lower. So these divergences could just get burned through if we keep moving lower. However, when you have potential divergence, when you have a security oversold, or at least it was coming off oversold levels here, and that's hence why you have this divergence. We hit oversold, we went down, we made a lower low, but with the indicators at much higher levels. That's positive divergence. This stuff is starting to, like I said, lean me, the markets have changed fast. Recently up here I was getting bearish because we were pushing back, on the broad markets, that is, pushing back up to the top of my, bounce target zones, and then boom, in just a couple days we've come full circle, and now I think the risk reward has already flipped back in just 2 trading sessions, flip back from the bearish side to the bullish side. So that's what you have in fast moving markets. Support levels, you can see support about 25.32, support. When I look at a weekly chart, I also see that same support. You can see the reactions there on this line here about 25.38. Before all said and done, sometime in the next, let's say, 3 to 6 months, I think XLE comes back down all the way back down here. But again, I don't want to get into this too much. This is sector analysis that's usually reserved for members of the site, right side of the chart. But I did want to cover this now because it plays into what's going on in the market today. And again, these are the top weighted sectors. I just showed you energy. The weighting in the financials is pretty hefty at about 13.3%. And so this is what happened today. And I'm going to spend a little more time after this going through the charts of the individual financial stocks, the big banks and insurance companies. Take a look there to try to get a better read, because once you see financials stabilize and start moving back up, energy, and then the other big one today was industrials. That was I believe that, yes, this was down. Basic materials was down a little more than the industrials, but industrials were down pretty big at one point, and they have a much higher weighting than basic materials. So you have a 9.8, so about a 10% weighting in the industrials. Pretty ugly chart. As you can see, we broke down here from this trend line. We had a long-term trend line there. It even goes to the left of the chart. We had an initial leg down, kickback rally, a back test. That was an objective shorting op. Another leg down, back tested that trend line again and fell once more. If we go a little bit lower, if we undercut these lows here, we'd have positive divergence. You don't have to have that. This chart's not very clear to me. I don't see a whole lot of support. You know what, I'd have to study the chart a little more and add some levels. There's definitely some support coming up. Well, actually, there it is. We hit that low. I was looking over here to the left. If these reactions, it comes in perfectly there. So call it 67. 67, which is a test of that other low or maybe a slight undercut, is a pretty significant support. And again, that would be probably at my max downside target right now at this point in time, barring some type of meltdown in the markets, which again, I don't see that. I see the unwinding of a big credit bubble and some positioning and squaring away to reduce risk. The big funds, pension plans, I think, are unloading equities, especially those that were top heavy in Apple, Amazon, Facebook. Sooner or later that will end, at least for the near term, and then you get a relief rally. So this is longer term stuff. I think industrials are going a lot lower, but again, I think we might be able to get a decent rally here soon, and if so, watch this sector as well. And now, where do we go from here? Well, today that's tough. We have PPO is curling up. We had this trend indicator dip back below that 9 EMA, back below the zero line on the 60-minute chart. This is, by the way, a 60-minute chart of QQQ. We had this trend line. We had the yellow uptrend line that was taken out on Tuesday. That sparked the waterfall sell-off. We had this secondary trend line. It's not really that valid. I had it as a potential trend line. You can see there were a few reactions back here. I had it on the chart before we even got there. But what happened is we sliced right through. No, you know what? I take that back. Wrong. We closed on it. That's a reaction in my book. We didn't bounce off it, but we closed on it. So that when I'm drawing trend lines, I'll count that as a reaction. So I'll leave that there. I was about to take it away and not give it a significant weighting. But what I wanted to mention is that we back tested it today. So that makes it gives a little pause. That's where I took out. I made mention to I think everybody that I went long NQ, at support with those divergences today, and right after the close, I put a very tight stop in, which I expected to get hit, and they took me out. So I'm flat. I'm just telling you. I don't like this. We could go up. If they build on these gains tomorrow, that would be pretty bullish. Maybe today had the making of a quiet a bottom without a big ump. I know a lot of people have been looking for a capitulation type sell-off, a selling climax. Maybe we get it, maybe we don't. One thing is when too many people look for the same thing, it usually doesn't happen. So we'll see. If we go back up, and there'll be plenty of time to get long if the charts continue to firm up. So right now I went flat, the indexes, right after the close because of this and this. We look at SPY as well, and I showed you earlier on the 1-minute chart, SPY made a near backfill, and I think it went up a little bit after hours, but that's going to be resistance. That 270-ish level, that was already resistance to begin with, or support, which was broken today on the gap down. This is a gap backfill. So, unless they take that out, this could be the end of that kickback rally for SPY. 60-minute trend indicator went bearish, dropped below that zero line there. And I'd also like to see, it'd be nice, not necessary, but it'd be nice to see some bullish divergence here on the 60-minute chart put in to make a case for a long. But I think I'll wrap the video up here. You can see the levels on the charts. It's been a lot of back and forth. I'll be very clear. My very near-term outlook is uncertain, and that's why I'm as far as the indexes go right now, my trading account, I'm flat as of the close. Shortly after the close, here's your big picture. We're in a big, powerful trading range. There's some swing trade ops. If you wait patiently, you can go. Would have worked so well. Would have worked well so far, and we did. We had our last short. It was on QQQ. It was on that last kickback to that level. I also mentioned going long unofficially. That was an official trade on the bounce up here and then shorting there. But now, anywhere in the middle here, you get into what I call no man's land. Right now, these are the levels to watch. The bottom of the range and the top of the range. Watch those gaps. You can watch these different support levels as you come up. But it might continue to be tough trading, especially for those that aren't very active and nimble. And I guess I don't have much more to add. Let's just see what happens tomorrow. We'll take it from here. If there's a big move overnight in the futures, I'll do a video in the morning before the market opens. Otherwise, we'll just pick up where we left off today. This has been Randy Finney with the right side of the chart. I hope you enjoyed it.